What's up, what's up? Man, we got a crazy week ahead of us, and I'm pretty sure the expected moves are going to show it off. So welcome back. If you're new here, we're going to go over the expected moves for the week. This is something market makers do price in. Kind of what they price in volatility at, where all the option orders are placed. This is where they get all their information, well, they get all their information from options, all the bets being placed, everything on the board. They look at it and say, okay, where do we got to hedge? You know that the market maker hedges your position when you take one. It is their job to remain at a neutral delta. I know everyone thinks a market maker's out to get them, but again, they are just to remain neutral in that. So if you go long, they got to go short. Keep them at a zero. You go short, they got to go long. Yeah, weird. Every time you buy a put, they're buying shares. How's that for rigged? Anyway, let's rock and roll. So we already opened up red. We got a lot this week. So we got what? CPI, rate increase, FOMC. We know we got Powell talking. What else we got? Oh, QuadWitching. Yeah, and then jobless claims. All the usual reports that never meant anything until this year when everybody all of a sudden thinks they're new. Anyway, got an exciting week this week. So right now, futures did open up a little bit red. I gotta say, before we continue. Okay, so I was thinking last week would be bullish and I would be short this week. And, man, I don't know how that changed. We're going to talk about this. This is Don Front Trading. Pre-recorded. We're going to keep this kind of short and sweet. There's Don Front Show where I'm going to go live. I'm going to have the chat on so I can talk to you guys, talk about all this. But I don't know how that's changed because I want to say I've seen stuff like this and it borderline looks like manipulation. You know, like, hey, someone wants cheap calls, someone wants cheap shares, they'll sell it off, put in a huge order. That's kind of just how things work, right? More sellers, it goes down. More buyers, it goes up. Pretty easy to manipulate when you have big positions or big money. Unfortunately, you can't do this if you have a $200 Robin account. You need just a tad bit more than that. Just a skosh. So I don't know. Do I sit on that end and do I want to be bullish? I know for certain right now, any green candles I'm going to be short. I'm going to start probably selling call credit spreads. If I were to buy any just straight puts, I'm going to give it time. Because, let's say we rally this week. Maybe we get 2 weeks worth of a rally. I don't even want to be put in the position to have to manage that or second guess, hey, what am I doing in this position? I will ride that red out. So I do that by putting risk in capital. I don't just arbitrarily just toss a number out there and say, I'm going to stop out at this. In my plan is, I'm going to lot this capital. I'm only going to risk this much, though. So if it hits here, I got to stop out. And then there's risk and capital where that position's going to zero or making me money. Those are the only two options. So right now, if we get any bright green candles, I don't necessarily want to fight it. I'm going to let the bulls do their thing. Hopefully I'm long taking some positions with that. But hopefully I can grab some short positions. Calls will be juiced up, so I'll want to sell some of those. Hopefully the volatility can boost those up and make those nice and juicy. But I'll probably jump into January stuff as far as that goes. Probably the call credit spreads I sell, which is usually I will sell for that Friday. I will give these a little bit of time. More of a traditional. I doubt I go in-out spreads. I'll probably still go out of the money. So I can at least try to avoid any disasters. Okay, so the next thing. The glaring sign that kind of has me worried. You've seen us go 2 standard deviations, no big deal. Not often, but in this market, we've kind of... the S&P, of most of all, is the most efficient one out there. And even that, we were pricing in, what was it, $6 last week? $6.74, something like that? And... we missed that. How were they that far off? That's what has me very curious right now. As in, is the next leg down starting? Do they announce 50 basis points that everybody thinks is going to be bullish and it just melts down? Do they announce 25 and it melts down? Do they announce 75 and it melts down? I can come up. So first of all, guys, there's going to be the rate hike increase. There's CPI. There's all the letters. There's all the excuses. And that can be spun anyway. It's kind of like an earnings call. How many times do you guys like, oh, they beat earnings. Why is it down? It's because they just spun the story, the guidance, a different way. Every one of those can be spun to a bullish or bearish way. If you don't know both sides of that coin, you're probably only following someone that's just right on that and they believe they're right and they're never wrong. You got to be careful. Speaking of which, has a YouTuber ever lied to you and told you time in the markets versus timing the markets? Because that's my next video coming out. I don't know what channel I'm going to do that on yet. But I'm going to break that down for you and the truth behind that. There's a kernel of truth there. Mostly that's why you're down. And I know you think you're down because the market's down, but this is why you're going to continue to stay down. So I'm going to break that down for you guys. So make sure you do hit the subscribe button. Anyway, getting back into this, I kind of have to take this as a warning sign. As in, were the markets really that efficient? Was this really some low volume end of the year, just move and surprise? There was no actual, they love to throw catalysts in your face and really show off why. Oh, that went down because CPI. That went down because of that. Everyone knows why something went down. We didn't really have a whole barrage of excuses last week. We just melted off and then stayed down there. So that has me a little bit concerned as to who just got out, who just doubled down short. Are they just removing risk for the following week that we have coming up? Or, that's really something you guys should take a note of. Because that's a very awkward timing. So how I'm going to play this week is I think I'm going to start bullish. And if it jumps bearish, I'm going to try to jump on pretty quick. With the volatility coming up this week, I don't want to play a bunch of back and forth game. I'm going to try any opportunity I can to just put my stop in the green, kick my feet up on the desk, and just enjoy that gain train for a bit. I'm really going to try. I usually like to get into position, and as it's going, I don't mind adding on. I don't think I'm going to do a lot of adding on this week. I'm going to take the play. It's going to work or it's not. It's kind of how this whole week's going to pan out for me. Because what I don't want to do is, first of all, what I just described to you is going to suck if I catch a fake out. Because I'm going to go long, and so it's going to sell off, tag me out. I'm going to jump on short pretty quickly. And, if it's in the futures contracts, what I'll end up doing is if I'm long 2 contracts, my stop loss is 4. So instantly close those, sell 2 to open, I'm instantly short. So when I say pretty quickly, I mean instantly. It's going to fill all at the same time. The thing is, again, I don't want to add on because if it goes down and that is a fake out, I end up just adding on at the next low and then it just rips up and I just give back stuff just unnecessarily. So when things are volatile like this, I kind of want to get in at the beginning, front run that risk, and then as it goes, move my stop in the green and manage that. Remember, there's no such thing as managing a red trade. It's either it wins or it doesn't. Right? That's really management. Where's your stop loss at? It's going to hit it. Bing, bang, boom. On to the next trade. It's in the past. Much like your profits are from Peloton. It's never coming back. So I don't know. With the week full of surprises and algos trading, I'm not going to be surprised at anything this week. We could end this week with wicks to both sides and nothing. We could rip up. We could rip down. I'm prepared for it all. I'm going to try bullish, I think, first. Unless we just beat this thing down. We beat this thing to pieces overnight. I don't know if I'll even try the oversold bounce. But we'll see. This is definitely not the week to be jacking around. I'll put it that way. If you're a new trader, how hard would it be for you to sit out 1 week? It feels like an eternity. I'm with you. 1 day for me feels like forever. But I still have no problem sitting that 1 day out. I remember when I was new, man, I'd look at my phone, I wouldn't be anything. I was missing out. Like, you feel like the stock market's going to just be gone tomorrow and never come back. Fairly certain it's going to be here next week. Pretty sure. 60-40. Yeah, odds are pretty good the market's going to be here next week. Right? Unless Putin gets nuts. We'll see. Hopefully not. Anyway, let's go on with the expected moves. So I did want to make that very clear warning. Like, we jumped up and we're still in this range. That's the bullish sign. The bearish sign, we went 2 standard deviations down on a nothing week. So who's trying to squeak one by on us right now? Right? You thought we'd move $6, we moved 12, and you think that's like a normal week when really they were pricing in nothing and still got out. So who didn't get the memo that the market was supposed to be a little weak last week? And step your game up. Where's your coffee mug? Let's rock and roll. Let's pull up TOS real quick. All right. What are we on? Tesla. Okay, so Tesla's got 1383. Okay, so let's do SPY. We got the 16th. Okay. 1302. So we were pricing in 6. I think QQ last week was 675. Now we're pricing in almost double. 1115. IWM was 3 something. So where are we at? 677. So almost double. We're kind of back to some real action. Time to get down. All right. So the S&P. The Mac Daddy. All right. 1302. Remember, I don't really care about plays If we stay in here, fair game. When we get outside of here, that's when I take the rein it back in play. I took a couple plays last week. I don't even know if last week was red or green. Forex really kicked. Yeah, last week was red. Yeah, I was bullish last week. I know Forex into the week. Forex kind of broke me even. Then Friday was green. Yeah, last week sucked. I can't remember if that was last week or the week before. Yeah, that was a red week. Been a while. That better not be a streak. Ooh, I know it's like all the YouTubers say, like, losers are part of the game, and it is. And then you go on winning streaks and losing streaks, and there's just something sexy about a winning streak, okay? Like, it builds your confidence, makes you take dumb trades. They're just so nice. You just wake up, how much you up today? A lot. It's a good week. Those red ones suck. And then, like, when that one red turns into two, it's almost a self-fulfilling prophecy. Because you're like, here it comes. Looking at this, man. What are we gonna just rock this thing 2 standard deviations up? If we get that far out of control and we go 2 standard deviations up, I'm probably gonna be incredibly short the market. If we're just gonna unravel like that, that was my alert to go short. I'm gonna take that off. All right, QQQ 11:15. I wonder how many people are in the comments right now. It's about timing the market. You're just a degenerate gambler. What do you guys think that's about, by the way? If you watch that and you're going to watch the next video, what do you guys think that's about? I'll give you a hint. There's a whole list of excuses YouTubers will tell you when they're red and why you should feel red and not blame them. Because you guys I will give that to you guys. You guys as a community are very quick to call out YouTubers. You said this and it's wrong. You know, and you're like, it's all the YouTuber's fault. They said due diligence, and then your due diligence was like watch another YouTuber and they just doubled down saying the same thing. You just heard the echo of the same one in the mountains. And you're surprised why you're red. What'll really baffle you is next year when you're still red. And you're like, okay, but recession next year, 2024. You'll still be red. Sorry. It'll make sense though. I'll make it clear for you. I can almost guarantee you, while this is not financial advice or anything like that, if you're red now, from following some of the popular YouTubers, nothing's gonna change at all. But good news is the past is in the past, and there's still no time like the present to change it. And I'm not going to talk about become a trader. This will be more of an investing mindset kind of video. Man, I gotta say, we are pricing in some crap. That kind of makes me want to go short. The visuals of this just make me want to just rock this thing to the downside and short some futures even right now. So I'm actually going to wrap it up here. If you guys want to know more about how I'm doing this, jump on to Don Front Show. Well, this video comes out after it. So hopefully you join me on the Don Front Show where we go live. I'm going to talk about all these positions, kind of what I'm going to do. And just even as I'm sitting here, I don't know if I'm even going to try bullish. I don't know. Hopefully we're just up in the morning so I can just short the piss out of this thing. We'll probably do 2 standard deviations up. Anyway, I'm going to wrap it up here, guys. I will see you all on hopefully tomorrow's video and Tuesday's live stream. Have a good one.